With world news. And Rio Tinto's windfall. The miner reports its highest full-year profit in 8 years on a surge in iron ore prices, but the company warns of significant uncertainty if the coronavirus situation worsens.
That's all straight ahead on Bloomberg Daybreak Europe, on DAB Digital Radio London, Bloomberg 1130 New York, Bloomberg 99.1 Washington DC, Bloomberg 1061 Boston, Bloomberg 960 San Francisco, Sirius XM Channel 119, and around the world on BloombergRadio.com and via the Bloomberg Business app.
And a very good morning from London. I'm Roger Hearing.
And I'm Naira Chahich. Good morning, everyone. It's 8:01 a.m. in London, 9:01 if you're listening in Paris, Frankfurt or Brussels. Talking about uncertainty around coronavirus, Roger. The bond markets seem to not necessarily be pricing uncertainty, but downright gloom. But what really seemed to hit the markets in the US yesterday was the CDC warning Americans to prepare for this outbreak. So far, whenever we've talked about market reaction in general, the narrative has been, look, the US economy can withstand this. But a comment like that, yes, it was a comment on a health risk, but it starts to maybe put questions in people's minds as to whether this global crisis can also hurt America.
It also really depends whether it's classed as a pandemic, and that seems to be moving forward now. We've seen the first case apparently in South America. We're seeing cases spreading in Europe, cases it seems in Croatia and Switzerland after Italy. We're even seeing suggestions that pupils in some schools in the UK stay at home, possibly as a result, possible infections coming from a ski trip visit to Italy. I mean, those kind of indicators, even in Canary Wharf, we're seeing Chevron advising some of its employees to stay at home at the moment.
Exactly. First infection in Latin America, in Brazil, South Korea, the infection surging to more than 1,000 from only 51 a week ago. But that pandemic word, Roger, it's still not been officially applied to what we're seeing. And yet this is the market reaction that we're seeing both in equity and bond markets to a certain extent, and you do start to ask yourself how much worse, if it gets worse, what kind of moves could we see? I mean, in terms of that market reaction, yesterday we saw another drop of more than 3% in the S&P 500, so worst 2 days for the US equity benchmark since 2015. The 10-year yield hit a record low. Right now we're steady on that, on a 135 handle. Remember that record low was around 131 that was hit in 2016. The 30-year yield extended declines yesterday. We dropped below 180. We're up a basis point now. We're on a 184 handle. The 2-year yield at a 3-year low, down 1.5 basis points. 120 is where we are. The 2's curve, by the way, is not inverted, and it has actually steepened over the past 3 days, but the 3-month 10-year remains in negative territory. In terms of how this is translated through equity markets, so we saw those steep losses in the US yesterday, but futures actually positive. Dow, S&P and NASDAQ futures all in the green. Dow and S&P futures up 4 to 0.5%. NASDAQ futures up 0.7%. You wonder if this is actually risk coming back or whether it's just a little bit of a technical bounce, because on the S&P minis, we did drop below 30 on the relative strength index. So it'll be interesting to see if what the futures are indicating carries through into the cash session in the US, because in Europe, we were seeing futures negative, and 3.5 minutes into the equity market open, we're seeing a fifth day of declines for the Stock 600, down 0.8% versus losses of 1.8% in yesterday's session. So the losses weren't quite as severe in Europe as in the US yesterday, but we're negative in Europe today, whereas US futures are in the green. Interesting comparisons to make. FTSE 100 down 5. The CAC 40 down 0.7%. The DAX lower by more than 1%. The IBEX and FTSE Mid both lower by about 0.4%. In FX, if you look across G10, so it's interesting that despite all this, the dollar index is still not touching 100, and it's a bit of a mixed picture when you look across the G10. You are seeing the yen bid in today's session. If I take a look at dollar yen to see where we're trading right now on that spot, we are at 110.47. Apologies, the yen's not bid, it's actually retreating slightly. Dollar higher by 0.25 percentage point against the yen after the yen strengthened for 3 days in a row. So that's a little bit of an interesting dynamic in terms of risk. And oil on the back foot, WTI 40 49.77, Brent at 54.64, gold higher by 0.7%, $1,645 an ounce, Roger.
All right, well, let's have a look at what the stocks are to watch this morning. Bloomberg's Kit Rees has joined us here in our London studio. So, Kit, good morning. First of all, Danone, because they're lowering their 2020 sales growth target. They've got a lot of exposure to China.
Yes, and this earnings season there's been a lot of focus on the potential impact of the coronavirus on companies. So Danone has cut its 2020 sales growth target, and it gets about 10%, a tenth of its revenue from China, where it sells bottled water and infant formula. If we look at the shares, they're actually roughly flat this morning. But that being said, they have been bouncing from quite a low level, and so the company said that the virus will shave off around 100 million euros from first quarter revenue. So something to watch going forward for sure.
And Peugeot, of course, been reporting PSA results. How do they look?
So it was a bit of, they reported a record year for 2019, so better than expected adjusted operating income there. The shares are trading roughly flat this morning when the market is down. But I guess the focus there really was on the outlook for the car industry. It's a bit more pessimistic, and Peugeot says that it sees the European car market shrinking 3% in 2020 and Russia declining 2%. So I guess it sort of adds to the sort of recent negativity around the outlook for, autos going forward.
Now, finally, Hermes. Now, that's a company you'd think would have real problems with exposure to the luxury market and all that, and yet not necessarily the way it looks.
No, so actually, the results are pretty positive there. So the company makes really expensive Birkin bags, and it saw double-digit earnings growth last year. Fourth quarter sales met analyst expectations, but I guess there's a little bit of uncertainty there. The CEO said it's too early to predict when the Chinese market will recover, as we maybe see an impact from the virus going forward. If we just take a little look at the shares, they're down 0.8%. I guess that's just very slightly underperforming the CAC index, but nothing too dramatic, really.
All right, Kit, thanks so much indeed. Kit Rees there within the London studio with stocks to watch this morning.
Let's get back to our top story. An increase in coronavirus cases across Europe, the Middle East and Asia is sparking concern the outbreak is widening into a pandemic. More than 2,700 people have now died as a result of the disease, with more than 80,000 cases of infection. Bloomberg's Selena Wang reports from Beijing.
So the World Health Organization has said the outbreak has not yet reached the pandemic level. There is growing concern around the spike in cases outside of China. South Korea has now become a hotspot for the virus, with infection surging to more than 1,000 from only 51 a week ago. And while there have been fewer than 20 coronavirus cases diagnosed in the United States, the CDC has warned Americans to prepare for a potential coronavirus outbreak at home, saying that they expect to see community spread in the country, and it's a matter of when, not if, this will happen. In Beijing, I'm Selena Wang, Bloomberg Daybreak Europe.
Meanwhile, in Europe, Spain's sealed off a Canary Island hotel with around 1,000 guests. That's after an Italian tourist and his wife tested positive for the virus. In addition, Spanish authorities identified another 3 patients in Barcelona, the Valencia region and Madrid have been affected.
We've heard from several companies this morning about the impact of the virus outbreak on their businesses. Diageo saying the virus will have a negative impact on sales and profit in 2020. The UK-based alcohol producer has seen significant disruption, with bars and restaurants largely closed and a substantial reduction in banqueting. Danone lowered its 2020 sales growth target as the coronavirus outbreak weighs on sales of bottled water and infant formula in China. And Rio Tinto says there could be delays to its growth projects as a result of supply chain issues caused by the spread of the coronavirus.
So what about the government reactions to all this? Well, Hong Kong's Financial Secretary Paul Chan has announced a $15.4 billion relief package in his annual budget. Bloomberg's Brian Curtis has more from Hong Kong.
Chan will dole out $1,280 to each permanent resident 18 or older, tax cuts, lower fees, and billions of dollars of subsidies, all to shore up an economy battered by the coronavirus and political unrest. GDP contracted 1.2% in 2019, and he's forecasting minus 1.5% to plus 0.5% this year. A deficit of $17.8 billion is seen in the coming year. All in all, though, a much bolder budget than usual, with spending at 23% of GDP. That's higher than the long-running standard of 20%. In Hong Kong, Brian Curtis, Bloomberg Daybreak Europe.
Fed Vice Chairman Richard Clarida says it's too soon to say if the coronavirus outbreak will materially hit the U.S. economy.
We are closely monitoring the emergence of the coronavirus, which is likely to have a noticeable impact on Chinese growth, at least in the first quarter of this year. The disruptions there could spill over to the rest of the global economy. but it is still too soon to even speculate about either the size or the persistence of these effects.
Clarida's comments at the National Association for Business Economics gathering in Washington, D.C. are the latest signal that officials won't rush to judgment on the need to cut interest rates. Now, interestingly, there's also a column on the Bloomberg by Bill Dudley, and what he says, Roger, is, well, he asked the question, how should the Fed respond given the high degree of uncertainty? He says most likely the Fed's going to wait a while longer before considering cuts. After all, the harm to the U.S. economy remains mostly speculative at this stage, but it won't take much more bad news for Fed officials to signal that they are prepared to act. Some say that could come as soon as the March meeting, not Bill Dudley, but some say that. More economic data about Chinese economic growth, imports and exports, and the impact on US manufacturing eventually will become available. This will be important in shaping policymakers' views. What Bill Dudley says is the greatest risk to the record US economic expansion is an external shock that the Fed can't offset because it responds either too late or without enough force. This risk is rising. The question that rises to my mind then is, if the Fed does turn dovish in March, by the way, the markets are fully pricing in a cut by June, if the rhetoric shifts, how does the bond market respond? Do we see yields drop even lower? Bank of America says the 10-year yield gets to 125 by June. Or do yields and inflation expectations actually start to back up slightly because the market says, okay, the Fed's getting in front and we're feeling more positive about growth?
Right, okay, let's move on to global news now. Leanne Gerrans joins us here. And Leanne, you start with the latest political developments in the US.
Yes, there was a lot going on overnight, Roger. In the latest Democratic debate, Senator Bernie Sanders filed the burn of his front-runner status. All six rivals delivered attacks aimed at stalling his momentum. Michael Bloomberg challenged Sanders by saying Russia is working to help him.
Donald Trump thinks it would be better if he's president. I do not think so. Vladimir Putin thinks that Donald Trump should be president of the United States, and that's why Russia is helping you get elected so you'll lose to him.
Bloomberg has been rising in national polls after spending more than $500 million on advertising. A reminder, Bloomberg is the founder and majority owner of Bloomberg LP, the parent company of Bloomberg News. There's pressure on South Africa's Finance Minister Tito Mboweni as he delivers his budget today. He needs to convince rating agencies that he has a credible plan to rein in government debt. Bloomberg's Amo Mbata has the preview.
Of 19 economists surveyed by Bloomberg this month, 14 expect Moody's to downgrade the country to junk this year, and 9 of those say it will happen in the first half. The ratings agency cut its outlook on the nation's assessment to negative in November, saying it would look to Mboweni's budget speech for a feasible strategy to contain rising debt. In Cape Town, I'm Khelang Bata, Bloomberg Daybreak Europe.
Growing violence in India's capital has left 17 people dead. That's after right-wing Hindu groups began attacking mostly Muslim protesters. They were demonstrating against the country's new religion-based citizenship law. Police have been ordered to shoot rioters on sight. It's the worst violence in New Delhi in nearly 3 decades. And finally, here in the UK, the new Chancellor, Rishi Sunak, must raise taxes in his first budget or break the government's rules on borrowing. That's according to a leading think tank, the Institute for Fiscal Studies. This leaves Sunak with tough choices as he prepares for his first budget on March the 11th. He's under pressure to increase spending on the NHS, social care and schools. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg Naira.
Leanne, thank you so much. Still ahead on Bloomberg Daybreak Europe, cash handouts, tax breaks and new investments. Hong Kong delivers a budget to save an economy wrecked by the coronavirus and months of protests. This is Bloomberg.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE, SIPC.
In today's volatile markets, investors need resilient portfolios to help handle the pressure. Through decades of expansions and recessions and changing interest rates, clients have turned to PIMCO to help them stay on course, no matter what course markets take. PIMCO, active fixed income solutions that aim to give investors an edge. All investments contain risk and may lose value. Investing in the bond market is subject to risks. Consult your investment professional prior to making an investment decision.
The possibility of lung cancer can be pretty scary, especially if you're one of approximately 8 million current or former smokers at high risk. That's why SaveByTheScan.org wants you to know that now there's a breakthrough low-dose CT scan that can detect lung cancer early, and it only takes 60 seconds. You stop smoking, now start screening. For an easy quiz to see if you're eligible, visit SaveByTheScan.org. It could save your life. SaveByTheScan.org is brought to you by the American Lung Association's Lung Force Initiative and the Ad Council.
Influential conversations from Bloomberg Television. Here's Emily Chang.
I'd like to welcome our Bloomberg Television and radio audiences now. New Disney CEO Bob Chapek and Executive Chair Bob Iger now joining us from Disney Studios in Burbank, California. Thank you both so much for joining us. This announcement happening just minutes ago. Bob Iger, I'll have to start with you. This ending years of speculation about who might succeed you, palace intrigue. Why now, and why is Bob Chapek the right person for the job?
As you know, I was going to be leaving the company and leaving my role as CEO at the end of 2021. And so the board has been engaged in a process for quite some time, considering who best to succeed me. In Bob Chapek, we have someone that not only knows the company very well, having run a few of our really important businesses, including Parks and Resorts, but he's also someone that we know very well, and we couldn't think of a better candidate to take over the company at this time. In terms of why now, we, as you know, recently completed the acquisition of 21st Century Fox and have been engaged in assimilating those businesses. We also deployed a brand new strategy, our direct-to-consumer strategy with ESPN Plus and Disney Plus, and of course now Hulu and Hotstar. My next priority was really making sure that our creative pipeline was as vibrant and as rich as possible.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings.
Markets, headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app and on QuickTake by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg's European headquarters in London, I'm Roger Herring. Time for a Bloomberg Radio Business Flash. Now over to First Word Breaking News Desk in Berlin. For today's morning call, here's Richard Jones. Richard, good morning.
Good morning, Roger. Equity markets were lower across the board in Asia today. The Kospi closed lower by 0.9%, with the Hang Seng down 0.7%. The Shanghai Composite closed down 0.8, as did the Nikkei 225, with the CSI down 1.25%. For U.S. stock futures, the E-mini S&P and E-mini NASDAQ futures are higher today after sharp drops yesterday, currently trading up by 4 and 0.5%, respectively. European equities are lower in the early trade this morning, with the Euro Stoxx 50, CAC 40, and FTSE 100 down 0.6%. The DAX is underperforming, trading lower by 1%. Turning to the bond markets, the U.S. 10-year yield is steady at 1.35%, with the 10-year German bond yield also steady at minus 0.51%. In the FX space, the Bloomberg Dollar Index is trading higher by 0.1%, with the greenback up against all other G10 currencies. It's a fairly quiet calendar for European economic data today. We've already had France consumer confidence for February beat expectations, and the Norway unemployment rate come in a shade lower than consensus. In terms of central bank speakers, today we get the ECB's Lagarde, Holtzman, Panetta, and Makhlouf speaking. That's it from me. For more macro breaking news, it's SQUA Go on the Bloomberg Terminal. Roger?
Thanks so much indeed, Richard. That's a Bloomberg Business Flash. Now here's Leanne Gerrans with more on what's going on around the world. Leanne.
Roger, good morning. Former Egyptian President Hosni Mubarak has died. He was 91. Mubarak ruled for 30 years before being forced out of office by the Arab Spring uprising in 2011. He went on trial for killing of more than 850 protesters by security forces, but in the end he was only found guilty of fraud. President Trump says he's considering an official response to China's expulsion of 3 Wall Street Journal reporters. They were expelled over an opinion piece, which Beijing viewed as discriminatory because it mentioned China as a sick man of Asia. It's believed one of Trump's responses could be a tit-for-tat expulsion of Chinese journalists from the US. And some parents in Hong Kong are requesting refunds from schools as they shut for months, firstly due to protests and now the coronavirus. Parents are being forced to juggle work and homeschooling amid the virus outbreak, with children missing at least 13 weeks of classes. Yesterday, the city extended its school shutdown until after the Easter break. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg Naira.
Leanne, thank you so much. Now, fears of a pandemic are continuing to mount as coronavirus infections top 1,100 in South Korea and cases surge in Europe and the Middle East. At the same time, top US health officials are warning Americans to prepare for a coronavirus outbreak at home. Meanwhile, in response to the outbreak, Hong Kong has unveiled a stimulus plan that includes a payout of 10,000 Hong Kong dollars to each permanent resident 18 years old and over. For more, let's go live to Hong Kong, where Bloomberg's Sophie Kamarudin is standing by. Sophie, great to have you with us. So the Hong Kong government is dipping into fiscal reserves, with the city also weighed by political unrest. What's the outlook for the economy?
Well, after delivering his budget speech, Hong Kong's finance secretary in a press conference this Wednesday afternoon, he indicated that first quarter GDP for the city will be, quote, rather bad as the government seeks to get companies back to normal operations and safeguard livelihoods with that $15 billion stimulus package. And so Hong Kong expected to post a budget deficit over the next 5 years, with that shortfall hitting a record in 2021, given the increase in spending and lower revenue. Now, doling out the cash handouts alone, that will cost 1 billion Hong Kong dollars. So with this backdrop, Naira, Hong Kong largely expected to suffer a second annual recession this year.
Now, Sophie, one of the most eye-catching parts of all this is I suppose we could call it helicopter money, this handing out of more than 1,000 Hong Kong dollars to every resident over 18. I mean, what do the Hong Kong government really expect that Hong Kong residents will do with this? And isn't there a risk they might just save it?
It's open-ended as to what the residents may do with the cash handout. As you pointed out, over 1,000 US dollars. That will only be given out in the summer. One would expect, and hopefully, that the outbreak will be contained by then. We have seen, of course, impacts on jobs, and of course, we have expenses that are being borne by the likes of parents, given that schools are on extended break. We could see a pickup, perhaps in savings, as people just aren't willing to spend. A lot of big-ticket items remain on the back burner.
Sophie, let's also talk about South Korea. It's really emerged as a hotspot for the virus, infections surging to more than 1,200 from 51 just a week ago. What's the response mechanism going to be in South Korea?
Yeah, we are seeing soaring virus cases in South Korea, boosting bets that the central bank will cut rates to an all-time low of 1% this Thursday. We're expecting the government to unleash more budget spending. And given that because business activity has been disrupted, that was illustrated by the plunge in manufacturers' confidence in a February survey. We're expecting that view will be soured even further, given the picture is not improving. As you pointed out, the total number of cases in South Korea now topping 1,200 after this afternoon. Local media in South Korea reported 15 additional cases. And we are seeing more countries restrict travel to and from South Korea as well, Naira, including India and the Philippines, Japan too, as authorities there attempt to contain the outbreak, with the Hokkaido prefecture reporting its first death. Now, while the Olympics is set to continue in Tokyo as planned, the government has called for major sporting events in Japan to be canceled in the next 2 weeks, which are a crucial period.
Now, Sophie, in the midst of all this, of course, what on earth is happening inside China, in Hubei province, where it all began, and more generally in China? How are they coping at the moment? What's the latest?
Well,
Well, based on the official numbers from China, the rate of spread on the mainland seemingly has slowed, and 6 new cases reported. Now, 5 of those were outside of Hubei, and the province was the only one to have registered fatalities in the latest count at 52. But we have seen an emergence of some cluster infections as factories are restarting, and China then is urging tighter controls. And in Shanghai, border checks will be stricter for people traveling from overseas in light of the increasing number of cases outside of China.
Sophie Kamarudin joining us from Hong Kong. Thank you so much with all the latest on the global fallout from the coronavirus. In terms of the fallout across markets, the 10-year Treasury yield hitting a record low yesterday to a 131 handle. We last got there in 2016. We're steady on that 10-year yield in today's session. 135 handle is what we look at. Of course, the 30-year yield got to that record low earlier, Roger, on Friday of last week. 183 is where we sit now. The 2-year yield continues its slide. European equities in the red, even as US futures have turned positive after the worst 2 days since 2015 for the S&P 500.
And straight ahead on Bloomberg Daybreak Europe, one company very exposed to all is Rio Tinto, but they're reporting their highest full-year profit in 8 years on the surge in iron ore prices. This is Bloomberg.
This is a Bloomberg Money Minute. The realization the coronavirus outbreak could upend global supply chains for some time drove Wall Street to massive losses. That's the backdrop greeting investors today. The Dow saw its largest 2-day percentage slide since February 2018, as well as its sharpest ever 2-session point drop. The Dow, NASDAQ, and S&P 500 all in the red year to date. The virus could put a worm in Apple's timeline for release of its new iPhones, the ones expected to have 5G technology. A Needham analyst says if virus disruptions to Apple's supply and demand go beyond June, the new product launch in September might not happen, meaning next holiday shopping season could be in jeopardy. The new CEO at Disney has the coronavirus outbreak close to the top of his agenda too. Bob Chapek is stepping into the role. Bob Iger left yesterday. The Shanghai park is closed temporarily due to the virus, and that's expected to show up in this quarter's earnings. Martin DeCaro, Bloomberg Radio.
What if you could keep the top economic experts in a conference room next to your office without having to feed them?
Do we need better optics? Do we need some substance? Do CEOs care about ESG?
We have seen quite a lot of stimulus pumped into the system already.
It's the biggest warning yet about the financial risks of climate change.
Now there are more ways to hear us. Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and at BloombergRadio.com. Bloomberg, the world is listening.
IBKR is the professional's gateway to the world's markets. IBKR offers commissions starting at $0 for U.S.-listed stocks and ETFs, enhanced price execution via IB Smart Routing, and access to our powerful trader workstation, web, mobile, and API trading platforms. In addition, our clients enjoy the lowest cost access to stocks, options, futures, Forex, fixed income, and more on over 125 markets in 31 countries. Learn more or open an IBKR integrated investment account at IBKR.com.
WW Weight Watchers Reimagined have a new customized weight loss program, MyWW, where no foods are off limits. Just fill out a simple assessment and get matched to a plan that suits you. You love eating carbs, cooking at home, or eating out? No problem with this new customized plan. Discover which new MyWW plan can make losing weight easier for you. Shape up for spring and pay just $9.95 per month. Offer ends 29th of February. Digital plan price. Subscription fees and conditions apply. Mainland UK only. See website for details.
If you're going to have NHS dental treatment, don't assume you can claim it for free. Not all benefits entitle you to free treatment. And if you claim when you're not entitled, you could face a penalty charge of £100, plus the cost of your treatment. Thankfully, the NHS Eligibility Checker will help you find out if you can claim for free. Then next time you're at the dentist, you'll know exactly which box to tick. Search Check Before You Tick online today.
The Dacia Sandero and Dacia Duster have both won What Car Awards in 2020. And with double the award comes double the celebration. So, we've put a second candle on the cake. Starting from only $6,995, our prices are pretty modest, just like our celebrations. Visit dacia.co.uk to find out more about our range of award-winning cars. Dacia. You do the maths.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn. When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow and TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Ah, finally another commercial, said no one ever. Visit TuneIn.com/premium to upgrade now and get over 45 commercial-free music stations.
Broadcasting live to London on DAB Digital Radio, to New York, Bloomberg 1130, to Washington DC, Bloomberg 99.1, to Boston, Bloomberg 106.1, to San Francisco, Bloomberg 960, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Daybreak Europe.
8:30 a.m. in London, 9:30 if you're listening in Paris, Frankfurt or Brussels. Good morning, everyone. I'm Naira Chehich.
And I'm Roger Hearing. You're listening to Bloomberg Daybreak Europe.
30 minutes into the equity market open in Europe. We're on a fifth day of declines for the Stock 600 and down more than 1% on Europe's equity benchmark right now. The FTSE 100 down 0.7%, CAC 40 lower by 0.8%, DAX 1.2% in the red, the IBEX in the red, the FTSE MIB actually trading flat, and US futures in positive territory after the worst two-day drop for the S&P 500 since 2015. We closed lower by 3% yesterday. Dow, S&P and NASDAQ futures all higher by at least 0.2%. But is that just a bit of a technical bounce given that S&P E-mini futures went below 30 on the RSI? We certainly saw a gloomy picture in bond markets yesterday. The 10-year yield hitting a record low. We drop a basis point now on a 134 handle. We touched that 2016 record low of 131 yesterday. The 30-year yield extended its slide yesterday. We're steady now at 183, but the 2-year yield down 3 basis points below 120 and at a 3-year low. In Europe, we're steady across bond markets. In terms of FX, after a few days of strength in the yen, you're actually seeing the dollar strengthen against the yen in today's session. So dollar yen trades at 110.40, higher for the first time in 4 sessions, up 0.2%. DXY still not getting to 100, despite all the risk off we've seen in the past couple of days. And oil continuing its slide. WTI stays below $50 a barrel, 49.68, down 0.5%. Brent at 54.50, down 0.9%.
Now let's move on to some of our top stories. Prepare for a potential coronavirus outbreak in the US is the message from the Centers for Disease Control and Prevention. US health officials are outlining plans to combat the spread of the virus. Meanwhile, Spain has sealed off a hotel with around 1,000 guests. That's after an Italian tourist and his wife tested positive for the virus. The total number of cases worldwide is nearing 81,000.
Hong Kong's finance secretary has unveiled a raft of measures to shore up an economy that's been hit hard by months of protests and the coronavirus outbreak. The relief package, worth $15.4 billion US dollars, includes tax cuts and cash handouts of around $1,300 to each and every permanent resident over 18. The government says it expects to see full-year growth between 0.5% and negative 1.5%.
And on to top corporate news, a surprise shake-up at Disney. The veteran CEO Bob Iger stepping aside, handing the reins to the theme park chief Bob Chapek. Now, Iger will stay on to direct the company's creative endeavors as executive chairman through 2021. Chapek will take over immediately as head of the world's biggest entertainment company.
And Rio Tinto has warned of a potential impact on projects from the coronavirus spread. That's as earlier today it reported a windfall from iron ore's price surge in 2019 that spurred profits to an 8-year high. The company gets about half its revenue from China.
Right, for more on that story, we're joined by Bloomberg's editor for metals, mining and agriculture, Lynn Thomason. Lynn, good morning. Welcome. Thanks for being here. Now, let's pick up on that notion, because iron ore clearly went through a boost, but I guess everyone is saying, well, what happens now where we are? I mean, how questionable is that for the first half of 2020?
Yeah, I think that's certainly the question at the moment. At
it seems like what Rio is saying, and the belief across the whole mining sector, is that you're going to see a V-shaped recovery, that you'll see this dip in demand as China deals with the virus, but they're going to do everything they can to pump a lot of stimulus into the economy, and that will be infrastructure will be a big part of that. That'll mean more steel, more copper, and that could boost prices later on in the year. But obviously it's a big question mark as to how that's going to play out.
Yeah, and it's interesting because certainly the bond market at no point seems to have been pricing a V-shaped recovery, and the equity market seems to be, at the very least, questioning the V-shaped recovery right now. So you wonder, when the miners will sort of take on that rhetoric, but also what about the fact that inventories have been building up? So even if we do get that demand coming through that they expect, will it be enough to deal with the inventories?
It'll be interesting to see what happens. I don't think anyone knows at the moment. I mean, it's interesting that, oil is somewhat different than iron ore and copper. For example, with iron ore and copper, you could just build more apartments, build more bridges, build more, something out there. So there is a way to take that inventory off, whereas oil, you can't drive the cars that weren't driven. So, it could be a difference between some of the different commodities out there.
And you were touching on copper just now. Copper is a big issue. I mean, it's one of the big Rio things, but it's also perhaps been in more trouble for longer, let's say, perhaps.
Yeah, definitely. Copper is clearly the one to watch. And the other one, surprisingly, that hasn't been on the radar is zinc. Has been hit quite hard in the past month. It suffered the most among the major metals on the LME. So I would say copper, zinc, and iron ore are the ones that we're watching at the moment.
With Rio, it's looking to both reward investors and fund new growth, whereas some rivals like Anglo have cut back on returns to kind of move more decisively to M&A and project spending. Is Rio going to be able to maintain that kind of two-pronged focus?
Possibly. I mean, Rio's definitely been among the more conservative miners out there in terms of funding new growth projects. There's not a lot to speak of, whereas Anglo's taking quite a different view and, buying more greenfield projects, buying more new assets, and I think some of the other miners like Rio and BHP have put their emphasis on share buybacks, dividends, because the big question is there enough growth out there to sustain that?
And before all of the virus issue came along, one of the big things we were discussing is the move towards more environmentally friendly areas in terms of the way big investors are thinking about where they're going in the future. Clearly that's going to impact the miners. Is Rio likely to be concerned about that?
Yeah, so the other big announcement from Rio today was their climate emissions, saying that they're going to be net carbon neutral by 2050. So they're going to reduce the emissions that come out of actually mining the materials. That's investing in renewable energy, buying carbon offsets, more electrification. But perhaps one of the interesting splits we're seeing is whether the miners are responsible for what's called the Scope 3 emissions. So the emissions that come from turning iron ore into steel, which is quite energy intensive. And Rio is saying we're not responsible for that, whereas some of the other ones are putting targets on those Scope 3 emissions.
Bloomberg's editor for Metals, Mining and Agriculture, Lynn Thomason, thank you so much. And just to give a bit of detail on what Rio was saying about China, it's focused on the ability of people in China to get back to work as a key indicator, Roger. And they've spoken with about 200 customers in China in recent days, and they see some signs that activity is starting to pick up, according to the chief commercial officer.
And don't forget, Bloomberg TV and Radio will be speaking exclusively to Rio Tinto's CEO, Jean-Sébastien Jacques, later today. Don't miss that conversation just after 11:30 a.m. London time.
We've got just a breaking line coming across the Bloomberg that Goldman Sachs is to sell IQ Student to Blackstone for £4.66 billion. Interesting, that line's crossed now. Of course, we've got a big private equity conference happening in Berlin today, the Super Return Conference. We'll bring you coverage of that throughout the morning as well. But now let's get the world news with Leanne Gerrans. Hi, Leanne.
Neighbour, good morning. The latest Democratic debate descended into a shouting match as the presidential hopefuls piled in to attack Bernie Sanders and Michael Bloomberg. Tempers flared as the candidates covered issues ranging from foreign policy to education and gun control. It was the last debate before the South Carolina primary on Saturday, and then the big one, Super Tuesday on March the 3rd. A reminder, Bloomberg is the founder and majority owner of Bloomberg LP, the parent company of Bloomberg News. In India, violence in the capital, New Delhi, has left at least 17 people dead as clashes broke out during President Trump's visit. Bloomberg's Ruth Pollard says for Trump, the trip was all about deepening U.S. ties with India as China's influence in Asia grows.
The $3 billion military deal between the two nations is an important part of that. Prime Minister Narendra Modi also received tacit international support for his government's hardline policies, with US President Donald Trump declining to discuss the citizenship law in New Delhi, even as the Indian capital erupted in deadly protests just kilometres from where the two leaders met. In New Delhi, Ruth Pollard, Bloomberg Daybreak Europe.
As the deadly coronavirus outbreak spreads across the world, the impact has been felt in Chinatowns from Sydney to New York and from San Francisco to Toronto. Bloomberg's Sibylla Gross has that story.
For one restaurant owner in Sydney's Eastwood, a suburb that's home to a large number of Chinese, business has been down 70% since late January, when the first case of the novel virus was reported in Australia. Still, some local outlets are also thriving. Pharmacies can't keep up with orders for face masks, hand sanitizers, vitamins and milk powder. In Sydney, Sibylla Gross, Bloomberg Daybreak Europe.
And finally, here in the UK, leading think tank is urging the new Chancellor of the Exchequer to raise taxes. The Institute for Fiscal Studies says Rishi Sunak needs that to fund his spending plans. An analysis cast doubt on whether the government can meet its commitment to balance the budget within 3 years. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg Roger.
Leanne, thanks very much indeed for that. Now, coming up on Bloomberg Daybreak Europe, we are certainly in panicky times if you look at what the market's doing, but don't panic. That's the message from our next guest, Gregory Purdon. He's key co-CIO at Arbuthnot Latham. He'll be joining Naira and I here in the studio talking about some of the numbers that we should be looking at in terms of assessing the markets. For example, strong employment in the US and potentially, I guess, the prospects for further rate cuts in the US from the Fed as well. That debate very live at the moment as the world economy absorbs the impact of the coronavirus, which seems, they're not officially yet, to be turning into a pandemic. This is Bloomberg.
Right now, Doctors Without Borders medical teams are operating in some of the most remote and dangerous corners of the world. When front yards become front lines, at the crossroads of conflict and epidemic, where there are no hospitals, that's where we operate. Your response is critical to our response in places where few others will go. That's where we operate. Learn more at doctorswithoutborders.org.
You knew the risks when you decided to drive drunk. There could be a crash. People could get hurt or killed. But that didn't stop you, did it? You knew you could get arrested. You could incur huge legal expenses, and you could possibly even lose your job. You were well aware of the consequences of driving drunk. But one thing's for sure. You were wrong when you said it was no big deal. Drive sober or get pulled over. This message brought to you by NHTSA.
Vatsal Shah is Senior Project Engineer at Mott MacDonald, a global engineering consultancy with more than 16,000 employees. He earned his PhD at New Jersey Institute of Technology, and as an adjunct professor, is helping NJIT students explore emerging technologies.
My focus is renewable markets, emerging technologies, the idea of floating cities. What are we doing to develop that? What will happen to the city on the water? Well, you're going to have waves hitting it. You're going to have solar. How are you going to develop plants? How are you going to develop vegetation and farming? That sort of thought process happens at NJIT. We actually plan out what will the city look like. How do we develop that? So in 10 years, we're actually ready to take on those challenges when we have our first development in the water. NJIT also has been doing a lot of work in self-healing materials, so taking the polymers and the new material that we have in our material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
At the Bank of Santander, they've created Stan, a smart bot that can predict the future of remortgaging.
All right, Stan, will my mortgage rate go up?
1955 was the last time Newcastle won the cup.
No, and try not to mumble.
Playing, let's get ready to rumble.
Meanwhile, at Santander, they can't predict your future, but they'll help secure it with great mortgage rates fixed for up to 10 years. See what's possible at Santander.
Early repayment charges apply. Lending subject to status and criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
When you're driving along a motorway and you see a red X sign, it means stay out of that lane because there's a hazard up ahead. Red X signs are there to keep us safe and keep us moving, because we all want to be somewhere. Somewhere like going to watch the undefeated Blue and Whites being defeated. Oh, well, it's always next season. Follow the signs. Keep us all moving. Search Highways England Motorways to find out more.
Fill the trolley with your favourite brands on rollback at Asda. A 38-pack of Fairy Non-Bio capsules was £8.50, now £5.75. A Lenore Gold fabric conditioner was £4, now £2.50. Big brands, small prices. Don't compromise. Asda. Save money, live better. Selected stores subject to availability. Lenore 1.925 litres. Ends 18th of March.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow
Bayless.
at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations. You'll also get live commercial-free news, plus live play-by-play games from NFL, MLB, NBA, and NHL. Visit TuneIn.com/premium to upgrade.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Markets, headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app and on QuickTake by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg's European headquarters in London, I'm Roger Hearing. Time for a Bloomberg Radio Business Flash. So over to Bloomberg's Tatiana Darrier here in our London studio for today's morning call. Tatiana.
Good morning, Roger. The sell-off continues here in Europe with the most major averages in the region down for a fifth consecutive session with the DAX underperforming. That follows another volatile session in Asia where Korean stocks led losses overnight. And turning to the U.S., futures are mixed with Dow futures now turning negative 80 points. S&P's still up 6, while Nasdaq futures still up 13 points. The U.S. 10-year yield is at 1.33%, and that's a new record low. German bond yields are steady at negative 0.52%. In the M&A space in Europe, Bloomberg has learned that KKR values Telecom Italia's landline assets at 7.5 billion euros. The private equity giant made a non-binding bid for a minority stake in the network earlier this month. And wrapping things up on the economic front this morning, consumer confidence in France was slightly better than expected, while unemployment in Norway was a touch below estimates. Among central bank speakers, ECB President Lagarde and Council member McClough speak in Germany today. Live from the First and Breaking News Desk, I'm Tatiana Daria. Roger.
Thanks, Tatiana. That's a Bloomberg Business Flash. Now here's Leanne Gerrans with more on what's going on around the world. Leanne.
Roger, good morning. The 2020 Olympics in Tokyo are now in doubt, with organisers saying they're more likely to be cancelled than postponed if the coronavirus outbreak does worsen. A senior member of the International Olympic Committee says organisers have 2 to 3 months to decide, adding the scale of the event means it can't be delayed or moved. Japan has spent almost $13 billion in preparation, twice what it budgeted. Virgin Galactic has resumed taking deposits for future trips into space. Richard Branson's company is trying to maintain momentum towards a commercial service. That's despite growing losses. Virgin isn't saying how much seats will offer or what they'll cost. And finally, a secret doorway used during the 17th century royal coronation has been discovered in the House of Commons here in the UK. The entrance dates back more than 350 years when it was established for guests to attend Charles II's banquet. It was later used by MPs but had remained lost for the past 70 years after being covered up by wooden panels. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Roger.
Leanne, thanks very much for that. Now, the spread of the coronavirus across the Middle East, Europe and Asia is fueling concerns that it's widening into a pandemic. But if you ask the Federal Reserve's number 2, it's still too soon to say whether the outbreak will cause material change in the US outlook. The Fed Vice Chair Richard Clarida did, however, say the virus is likely to have a noticeable impact on Chinese growth in the first quarter. Well, for more on all this, let's bring in Gregory Purdon, who's co-CIO at Arbuthnot Latham. So, Gregory, thanks for being with us. Welcome. Good morning to you. Your general drift is don't panic. That's your message to investors. In fact, you're saying now is actually quite a good time to hang on to the dollar. Why?
Okay, I mean, in terms of our posture around the whole corona contagion, I mentioned earlier that, as a dad, I don't want my kids to go to school. As a trader, I look at the yield curve and I go, that doesn't look right. But realistically, I mean, people have been forecasting the end of the world since the beginning of time, and we're still here. And I think we need to just keep some perspective. A lot of people have been betting against the dollar over the course of the past year and a half, arguing that the dollar was going to wane, and we've stuck to our positions. We're not making any outright bets pro dollar, but I would think that it's certainly a good currency to hold, especially if you still are positioned risk on.
Also, potentially, a lot of people say if you're positioned risk off, the dollar is the currency to hold as well, particularly as it's tended to rise with the coronavirus. Although what I will say is it's interesting, DXY hasn't got to 100 yet. But let's talk about what's happening in the bond markets, Greg, because we hit a record low in 10-year yields yesterday. The 30-year yield got there first on Friday. Is the assumption in bond markets global pandemic and the Fed steps in?
Yeah, absolutely. I mean, look, I don't see, and I'm not a health, official, but I'm very skeptical that this morphs into a mega event. And if you look at over the course of the past, say, 30 years, all these scares. I mean, in fact, it was with you about 2 years ago where we discussed North Korea. Mm-hmm. Right, North Korea was going to be the end of the world, and actually, it didn't. And I think that the reality is that the perception is that the credit guys, the bond guys, know better than the equity guys, and it's true. Historically, the credit guys tend to be a bit smarter. But the reality is that the yield curve is probably going to come in further as this whole thing develops, and eventually we'll probably snap back.
Where do you see the Treasury yield floor then?
Well, I mean, it's difficult to say, but I mean, if it continues as it's continuing over the course of the past few days, I mean, I said earlier, probably prints 1, 10-year probably prints 1. But I wouldn't necessarily make that bet. That's not a bet I would make. I mean, a bet I would prefer to make would be something along the lines of when we start to see potentially this starting to hit some sort of peak, look at things which have been badly beat up. And so, for example, one of the assets on our hot list, so to speak, is the prospect for maybe taking positions in the euro. The euro has exhibited some weakness. It's very correlated to Germany, which is the engine of the European economy and has an export feel to it. And that could be something that could respond well to a bit of a snapback.
Although, if you were to take that position in the euro, I wonder, would that change your dollar call to maybe a little bit of dollar weakness? But I'll maybe let Roger take that question, because I wanted to ask what you think the equity reaction function is going to be. The way the last 48 hours seem to have panned out is that we've seen bond markets move and hit these record lows in 30-year and 10-year yields, the 2-year yields at a 3-year low. And it's almost as if the equity market woke up for a moment to what the bond market was pricing, i.e. V-shaped recovery, perhaps not. What's the reaction function in equity markets if the 10-year yield gets to 1%?
I mean, the reality is I still don't see any panic selling. Right? I mean, there's definitely been waves of selling, but I think we need to see something really material to happen before we start to see some panic. And it's true, like I said earlier, the credit and bond markets tend to lead, but ultimately we're not seeing the evidence as of yet that this is turning into a mega global event. So for the time being, if you look at actually the way we've positioned portfolios, we actually haven't made material changes since the corona has actually started to take effect.
Well, if you wanted to sign to some of the panic, stocks Europe 600, they've extended the losses down 2% now. But if I can pick up with you, going back to what you talk about, the dollar and the yen, the dollar-yen is interesting because the yen, traditional haven currency, obviously, doesn't seem to be behaving that way. Now, what's going on, do you think?
I mean, the way I was looking at my screens this morning when I woke up, the way I'm interpreting the yen move is that you're right. Typically, the yen is a safe haven currency alongside Swissy, alongside dollar. But now there's this whole question mark about whether the Olympics are going to get cancelled. The reality is that we know that monetary policy, that it just doesn't work in Japan anymore. I mean, what are they going to do? Go even more negative? What's the impact of that? It just doesn't work. So the question now, I think, on investors' minds are going to be whether that fiscal trigger, I think the number is 121 billion that they announced not too long ago, whether that's actually really going to have a push effect, yes or no. And I think people are taking it out on the yen.
Greg, the US real rate and term premium, both negative right now. How does that impact your portfolio, and how does it impact your dollar call? Okay,
so the way I look at it, I would be slightly different. What I'm thinking about and what I'm focusing on is I'm saying to myself, okay, are we going to see any defaults? Are we going to see anything in the bond market, in the credit market, which basically says, okay, things are actually starting to break a little bit? Because we all know the story. A lot of leverage loans. Leverage loan market is now as big as the high yield market. There's a lot of investment grade bonds that could potentially turn into high yield bonds if we start to see some negativity in the credit market. So actually my focus in terms of looking for early signals, early signs, is actually the US bond market. And if we can get some of those signals, then I think we can start to really reposition, go back to the drawing board, get the playbook out, and decide what to do next.
Gregor, there are other things out there happening apart from the virus, though it's very dominant, of course, this morning. One thing we're keeping an eye on, obviously, is the post-Brexit trade talks going ahead, and, of course, the UK budget here coming as well. What about your exposure to UK stocks at the moment? How are you playing that?
Okay, so our positioning has been very much, we went long sterling. We've actually closed that, by the way, only a few days ago. And we rotated from FTSE 100 to 250, similarly to many of our peers. Actually a bit surprised that the FTSE 250 has actually fallen in line with some of the other broad indices. Definitely think that, one of the things that kept me up at night was the prospect of a Corbyn government, because that's bad for business. I mean, that really would have been bad for the UK PLC. And the fact that risk is off the table, we believed in the IC and me personally that would open the door up for a greater positivity towards UK equities, which I think was reflected by some of the other investors and traders across the market.
What you said about credit in terms of that's where you're really looking to see if there's signs to be concerned. We did see a backup in yields yesterday, particularly in high yield, but spreads have been very tight. Are you compensated for the potential risk out there in credit markets right now?
Probably not. I mean, one of the areas that we're going to be focusing on increasingly is European financial credit, where there's still a little bit of money to be made. But I appreciate that's a well-telegraphed idea.
All right, Gregory, thanks very much indeed. Gregory Purdon there, co-CIO at Arbuthnot Latham, joining us in our London studio. And coming up in the next hour of Daybreak Europe, Anna Edwards and Caroline Hepker back on the programme. They'll keep dissecting the impact of the virus on growth, get a take on what it means for investors, with Jean Frieda, global strategist at PIMCO.
And in terms of the impact on markets, the Stock 600 extending losses down more than 2% right now, so bigger losses than what we saw in yesterday's session. Worst 2 days since 2015 for the S&P 500, but futures were positive. Now they're in the red as well. Perhaps it was just a technical bounce. This is Bloomberg.
Family properties in
Discover Cork with Aer Lingus when you fly from London from $55.99 each way as part of a return trip. Experience this vibrant city and head to the coast for authentic Irish seafood and stunning scenery. Smart enjoys a short break in Ireland. Smart flies Aer Lingus. Book now at aerlingus.com. Offer subject to conditions and availability.
If you're going to have NHS dental treatment, don't assume you can claim it for free. Not all benefits entitle you to free treatment. And if you claim when you're not entitled, you could face a penalty charge of £100, plus the cost of your treatment. Thankfully, the NHS Eligibility Checker will help you find out if you can claim for free. Then next time you're at the dentist, you'll know exactly which box to tick. Search Check Before You Tick online today.
Financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
This is Bloomberg Daybreak Europe.
External pressure is going to be an opportunity for reform in China. I think liquidity more generally across financial markets is an issue and a concern.
The Spanish banks in particular are in a much better place than they were 5 years ago.
It wouldn't be great to have a drawn-out trade conflict with the US or indeed with anybody else.
I've never been one to prophesy where sterling will be, and you're a madman if you think you can.
Bloomberg Daybreak Europe on Bloomberg Radio.
Good morning from London. I'm Anna Edwards.
And I'm Caroline Hepker, standing in for Matt Miller, who is actually at the Super Return Conference in Berlin today, isn't he? The major event for private equity companies in Europe.
Yes, he is. You're listening to Daybreak Europe live on London DAB Digital Radio. That's where Matt is. We'll have ongoing commentary from Matt Miller on the private equity side of things as we go through the day here at Bloomberg. Let me tell you what's going on these markets, though, because we need to check the markets every 15 minutes for you. After the heavy selling of Monday and Tuesday, once again, another day of heavy selling here in Europe. So a little bit of catch-up being played in the early part of the session. US futures pointed higher, but European stocks opened in negative territory. But now US futures have also succumbed to the downside. So E-mini futures down around 0.5%. NASDAQ futures down 0.7%. So it seems at least the short-term trajectory is set. Let's see where that takes us. But the Stock 600 here in Europe down by just over 2%. The FTSE 100 down 1.4%. The CAC 40 1.7% weaker. And the Xetra DAX down by 2.2%. So a lot of the selling today coming through in Germany. Looking at the sector breakdown of what's on the move, I know Lufthansa is heavily hit, but that's not an incredibly big weight on any index. But travel and leisure is the biggest losing sector in Europe today, down by around 3.5%. Financial services also under pressure, along with industrial goods and services, things that have supply chains to China, of course, in focus. That said, we've had individual updates from companies like Diageo and Danone citing coronavirus risks and telling us what impact that's going to have on their numbers. It doesn't necessarily mean that the market receives that information negatively. We actually saw Danone trading in positive territory on the instant response to that update from the company. A couple of other assets for you as we see risk-off mood permeate across these assets this morning. So the Brent price of oil, 54.23, down another 1.3%. We're below $50 a barrel on WTI now, 49.33. The yield on the US 10-year hitting a new all-time low in yesterday's session. We're down at 1.32% right now, so further weakness on the US 10-year yield. The dollar actually fairly flat, and we have seen this as the haven currency of choice in recent sessions, but the dollar and the yen both fairly flat, which is interesting, Caroline. So FX markets perhaps not reacting quite as they have done in recent sessions, but that's a quick look at the markets.
Yeah, indeed. Of course, the fears about a pandemic are continuing to mount, and that's why we've seen so much movement in terms of the markets. Coronavirus infections at now top 1,100 in South Korea, and we've seen cases surge in Europe and the Middle East. At the same time, top US officials are warning Americans to prepare for a coronavirus outbreak at home. The CDC saying that it's basically inevitable. For more on that, let's go live to Beijing, where Bloomberg's Selena Wang is standing by. Selena, good to speak to you. What are the latest numbers, though, when it comes to the epicenter, obviously, which is China? How have we seen the virus spread and how the authorities are trying to deal with it?
Well, here in China, the rate of infections continues to stabilize. Across the country, you do still have stringent travel controls, health checks, and Hubei province, the center of the outbreak, reported 401 additional cases, which is fewer than the day before, while the rest of China reported just 5 new cases, and all of the additional fatalities were concentrated in Hubei province. And some cities in China have also started to curb travel from outside the country. So, for instance, a coastal city of Weihai is now requiring people arriving from Japan and South Korea to undergo 14-day quarantine. So that sort of points to a signal that the epidemic's momentum may be shifting outside of China, where you mentioned in South Korea, which has become a hot spot for the virus. Infections there surging to more than 1,200 from only 51 a week ago. Italy has also implemented lockdowns in certain areas. There have been more than 300 cases in that country and 11 deaths. You also have Iran now reporting 15 deaths. So very much the concern now is the growth in cases outside of China.
So the focus is on that number, as you say, that the rising infection rate outside China. In terms of Selena, though, the impact on the Chinese economy, because we started out very much focused on China, the world's second largest economy, of course. What's the latest on the assessment there, the impact it's having on the economy? I ask because I saw Rio Tinto to say today they're starting to see some improvements in China activity. I saw one European utility company saying they're reopening their offices in Hong Kong and in China. Is there a sense that anything is turning on that front?
Well, you're certainly starting to see more businesses slowly start to come back to work as the Lunar New Year holiday ends, and the Chinese government is encouraging places that haven't been hard hit to ramp up production as soon as possible to try and shore up economic growth. But a range of early indicators from Bloomberg shows that China's economy in February did significantly cripple production and consumption, and Standard Chartered actually expects economic growth to come in at just 2.8% in the first quarter. So that's a substantial downgrade. That's even though output may return to more than 80% of normal by the end of February, according to the bank. The longer than expected delays have already caused substantial losses. Also, according to a Standard Chartered bank survey of China's small and medium-sized companies, they reported their worst business conditions ever. And of course, in addition to that, Hubei province, which accounts for 4.3% of China's GDP, that place still remains under lockdown. And all across the country, you still have quarantine restrictions, bureaucratic sign-offs required for many businesses and factories to reopen, and many measures to try and contain the virus that are hampering the ability to get business back to usual.
Indeed. Thank you so much for keeping us up to date. That's Bloomberg's Selena Wang live in Beijing. I think we also need to concentrate, obviously, on Europe as well, because there are cases in Spain, 3 in the mainland, and also a hotel on the Canary Islands has been isolated with 1,000 people there, testing ongoing. Here in London, I know, Anna, that in Canary Wharf, which is obviously a massive business hub just to the east of the city of London, Chevron has asked traders and other staff at its office in London to work from home just as a precaution. There are, only some 13 or so cases here in the UK at the moment, but there's, this real concern growing about transmission in Europe.
Yeah, that Chevron move, a very precautionary measure, we're told. Markets very much reacting to the latest on the global spread then. Markets digesting the virus risk. We've seen US 10-year Treasury yields hit a record low, touching 1.3055% yesterday as investors looked for safety. For more, we're joined by Bloomberg Opinions market columnist Marcus Ashworth. Marcus, good morning to you. What is the floor for the US 10-year yield? Is there one with the state of worry? It's zero. It's not
zero bound. No, I think that
it's not less than zero.
No, I don't think it's going to get that close. But the point is that there's no reason for it not to go lower. The 30 years led this move lower in yield as everyone's grabbed duration, and I think that's a trend simply because we're have to expect more QE out of central banks. The Fed has so far been resistant to it, but I think we're all well aware that if there's an outbreak in the US in any meaningful sense, like we have, say, in Italy or Iran, that the markets are already reacting and preparing for that. And bonds, yet again, have got this right rather than equities, and it's something which has been confusingly why bonds have been trading so much better in price and lower in yield, and I think now we know the answer why. Everyone's raced to protect their portfolios, and it's been a precautionary move which has proved so far to be the correct one, and I think people will continue to do so.
I think it's interesting that, in your piece on the Bloomberg Terminal this morning, you talk about the zero bound for US yields. I suppose the question is, how quickly, how big a risk is that? But then also, just tell me about the comments then from the Vice Chairman, Richard Clarida. I mean, obviously very, very cautious yesterday, still too soon to talk about the impact. How did you read those comments?
Clarida is essentially the power and the brains in the Fed. Powell has not had a very good time of it all, but people look at Richard Clarida as essentially has been the guiding light. And mind you, the last time he warned that rates were on hold, they promptly cut them the next meeting. But I do think that it's to him that we look. So far, it's been highly cautious. They don't want to be forced into having to cut again in an election year, but they've cut 3 times already. And as an ex-Fed governor said, what's wrong with the fourth one? The first 3 were for caution and just in case, and this is the scenario we do need more. So whether or not we get that, I think they'll be keeping a very close eye on the repo markets, making sure liquidity is a pump prime. And we will see the ECB as well, possibly today, mentioning a couple of things. I would expect them to have to react first.
Okay, thanks very much, Marcus. Good to speak to you this morning on the market reaction that we're seeing here. Bloomberg Opinion market columnist Marcus Ashworth.
Right, let's get over to Bloomberg's Leanne Gerrans, who's got all the latest in global news for us. And you start with US politics. Good morning.
Yes, good morning, Caroline. In the latest Democratic debate, Senator Bernie Sanders felt the burn of his front-runner status. All 6 rivals delivered attacks aimed at stalling his momentum. Michael Bloomberg challenged Sanders by saying Russia is working to help him.
Donald Trump thinks it would be better if he's president. I do not think so. Vladimir Putin thinks that Donald Trump should be president of the United States, and that's why Russia is helping you get elected, so you'll lose to him.
Bloomberg has been rising in national polls after spending more than $500 million on advertising. A reminder, Bloomberg is a founder and majority owner of Bloomberg LP, the parent company of Bloomberg News. There's pressure on South Africa's finance minister, Tito Mboweni, as he delivers his budget today. He needs to convince rating agencies that he has a credible plan to rein in government debt. Bloomberg's Amo Mbata has this preview.
Of 19 economists surveyed by Bloomberg this month, 14 expect Moody's to downgrade the country to junk this year, and 9 of those say it will happen in the first half. The ratings agency cut its outlook on the nation's assessment to negative in November, saying it would look to Mboweni's budget speech for a feasible strategy to contain rising debt. In Cape Town, I'm Mkhelang Bata, Bloomberg Daybreak Europe.
Growing violence in India's capital has left 17 people dead. That's after right-wing Hindu groups began attacking mostly Muslim protesters. They were demonstrating against the country's new religion-based citizenship law. Police have been ordered to shoot rioters on sight. It's the worst violence in New Delhi in nearly 3 decades. And finally, here in the UK, the new Chancellor Rishi Sunak must raise taxes in his first budget or break the government's rules on borrowing. That's according to a leading think tank, the Institute for Fiscal Studies. This leaves Sunak with tough choices as he prepares for his first budget. That's on March the 11th. He's under pressure to increase spending on the NHS, social care and schools. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg Anna.
Leanne, thank you very much. Now with your morning sports update, here's Joe Rawson.
Chelsea face an uphill task if they're to remain in this season's Champions League. It's after Frank Lampard's side were beaten 3-0 by Bayern Munich in the first leg of their last 16 tie at Stamford Bridge last night. In the night's other tie, Napoli and Barcelona drew 1-1. Tonight, Manchester City are in Spain to face Spanish giants Real Madrid in the first leg of their tie. St Mirren came from behind to beat Motherwell 2-1 in the Scottish Premiership. The victory moves Jim Goodwin's side 4 points clear of the bottom 2. West Bromwich Albion have a 7-point lead at the top of the Championship this morning after their 2-0 victory over Preston North End. Nottingham Forest had jumped up to third after they edged past Cardiff 1-0.
So that was the European sports. Now the roundup of the latest US sports with Pete Fox.
On the scoreboard in the association from Portland's Moda Center, Jason Tatum put up 36, leading the Celtics past the Trailblazers 118-106. In San Francisco at the Chase Center, the Warriors have dropped 7 in a row, losing to the Kings 112-94 from the night on the ice. Capitals, a 4-3 win over the Jets in the shootout. Alexander Ovechkin scoring number 43. Boston's dropped back-to-back games after losing to the Flames at TD Garden 5-2. Rangers edging the Islanders in Brooklyn at Barclays in overtime by a score of 4-3. And the Devils have won 4 of 5 after a 4-1 win over the hapless Wings. I'm Pete Fox. That's your Bloomberg NBC World Sports Update.
Great, thanks to Pete. Now still ahead on Bloomberg Daybreak Europe, more of the same or a move to the right. So that is potentially the choice facing Germany's CDU party as leadership candidates Armin Laschet and Friedrich Merz battle it out for the top post. We're going to go live to Berlin on that story next.
We should just check the markets, though, Caroline, and the Stock 600 down by 2.7%. The Xetra DAX, the worst performing of the major markets, down by just over 3%. Travel and leisure, financial services and technology, the sectors losing the most this morning. Another down day for European equity markets, for global equity markets on ongoing fears around the global spread of coronavirus. This is Bloomberg.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Today, nearly all business is international business. The same goes for business disputes. That's why the International Center for Dispute Resolution provides a faster, more efficient approach to dispute resolution.
The Dacia Sandero and Dacia Duster have both won What Car Awards in 2020. And with double the award comes double the celebration. So, we put a second candle on the cake. Starting from only $6,995, our prices are pretty modest.
We're investing over £7
just
million
like our
into making
celebrations.
improvements for you. Like
Visit
Canopy,
dacia.co.uk to find out more about our range of award-winning
Book your
cars.
tickets at southernrailway.com. Southern Railway, we're with you.
Century Fox and have been engaged in assimilating those businesses. We also deployed a brand new strategy, our direct-to-consumer strategy with ESPN Plus and Disney Plus and, of course, now Hulu and Hotstar. But my next priority was really making sure that our creative pipeline was as vibrant and as rich as possible.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app. Or check
years ago, and the economy held up relatively well, certainly better than what was expected. But the vote that occurred in December really set the stage for the next 12 months. There's a lot of pent-up demand, pent-up capital. I think there's comfort taken in the fact that at least we have a direction. That being said, there's a lot of work to do to reach a final Brexit agreement. So I would say we're cautiously optimistic on activity in the UK.
Well, thank you so much, Blair, and have a good day. Okay, with that, I'm sending it back to you, but not before I'm teasing my next interview at 11 o'clock CET. I'm going to speak to the co-CEO of Carlyle Group, Kyung Lee, here on CNBC. Back to you.
Netta, thank you so much, and we'll look forward to that interview coming up at 11. All right, well, coming up on this show, Peugeot owner PSA beats its full-year revenue estimate, but the car maker says work remains in China. We'll have more after the break.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
You desire. Thin hands, wood refinishing done right.
Exploring the heart of historic Europe with Viking, you'll get closer to iconic landmarks, to local life and legendary treasures as you sail on board our patented, award-winning Viking longships. You'll enjoy many extras, including Wi-Fi, cultural enrichment from ship to shore, and engaging excursions. Viking, voted #1 river cruise line by Condé Nast readers. Learn more at vikingcruises.com.
Day 1, 50 Peloton rides to start the year. Here we go. Halfway there, just hit a 5-day streak.
We did not wake up to be mediocre today, Peloton.
It's just another meeting.
Come on, you didn't wake up to be mediocre.
Selling on Poshmark is crazy simple. All you have to do is post a picture, add a description, add a price, and you're pretty much good to go. Right now I'm selling Air Jordans and Nikes and Adidas, anything really performance related or style related.
Download the free Poshmark app now.
We are the dreamers.
We changed the world.
Because we don't give up.
IU can help you live your dream.
IU is an online college, so your campus is wherever you want it to be.
Take classes when you want to take classes.
You receive the tools you need at no extra cost.
Even a brand new laptop and tablet to use in school.
Call IU, then tell them your dream.
1-800-967-1179. 1-800-967-1179.
If you're living with diabetes, then you understand the difficulties, from painful finger sticks to worrying about highs and lows. If you haven't heard of continuous glucose monitors, listen closely. A continuous glucose monitor is a breakthrough technology that reduces finger sticks and warns you of dangerous spikes in sugar levels. If you meet these requirements, you may qualify to receive a CGM from Solara. Solara, your single-source solution for better diabetes care.
Next on Squawk Box, venture capitalist Chamath Palihapitiya betting big on space. His reaction to vertic numbers and the markets. A Squawk Box exclusive today. Watch and listen live on the CNBC app.
Welcome back to the program. Hermes posted a slowdown in fourth quarter sales growth as the French luxury firm was hit by protests in Hong Kong and a tax increase in Japan. But the firm said it was starting to see stores reopen in its crucial Chinese market despite concerns about the coronavirus outbreak. Hermes also said it was too early to tell the financial impact of the epidemic. Diageo already seeing the impact, though. The company says it's seen significant disruptions to its operations in Greater China, and the drinks maker expects those operations to remain unsettled into March. The British group says 2020 net sales will take a hit of up to £325 million, while operating profit could drop as much as £200 million. Danone has lowered its full-year outlook and warned that the coronavirus will also hurt its Chinese operations. The French food giant said it expects the outbreak will wipe €100 million off first-quarter Chinese sales. Full-year net profit also missed expectations, falling to €1.9 billion.
And the corporate warnings keep coming. Adecco swung to profit in the fourth quarter, but expressed concerns about a slowdown because of the uncertainty around the coronavirus outbreak and its potential to disrupt manufacturing supply chains in Asia. The Swiss human resource company posted a net profit of €256 million, but on an organic basis, revenue fell 4%. PSA Group has beaten full-year revenue estimates and reported a 13.2% rise in annual net profit. The owner of Peugeot also raised its dividend, even though it warned of a 3% decline in the European auto market this year. Our colleague Charlotte Reed joins us now from a PSA headquarters in Paris. Charlotte, what did Mr. Tavares have to say about the impact of coronavirus on PSA Group?
Well, he said at the moment they don't see any disruption. Things are running as normal. He didn't give a time frame of when things could get trickier. And as you said, like the supply manufacturing chain could be impacted by the epidemic and the coronavirus. There's some peers, European peers, have mentioned they have a couple of weeks worth of parts, and then after that they might have to start closing plants. PSA didn't give any time frame, any indication. Say at the moment things are running as normal. And of course, this is an extra factor in an industry that's already facing a lot of headwinds. Sales in Europe are slowing, and in the 2020 outlook, they mentioned that they see sales in Europe going down by about 3% next year. And also, other headwind is China. Before even the coronavirus crisis, sales have been very much going down in China. And on top of all this, you have all the technical challenges for this industry. You have all the investment that needs to be done, the heavy investment that needs to be done to be future-proof, electric cars, self-driving, etc. So one of the solutions that all these car makers have come with is, of course, alliances and mergers, pull together technologies, investment, etc., to be able to face the future. Of course, we know PSA is in the process of merging with FCA. At the moment, it will take 12 to 15 months to come together. And Mr. Tavares said conversations are going very well. The stars are aligning. They're working very hard. We know that alliances mergers in this sector are notoriously difficult. And here you have also the French government, the Italian government involved, saying we want to keep jobs in our countries. So all this equation makes it very complicated. But Mr. Tavares, who's one of the stars of the car industry now, turned around Peugeot very successfully since being at the helm of the company. Strong result we've seen posted this morning. That's why the stock is doing quite well this morning, outperforming the market this morning on the back of these strong results. One of the discussions we had also was the strategy of the group in China. China, where a lot of the growth has been coming for the sector, but PSA and also FCA have a very small market share. There's only about 0.5%. So I asked Mr. Tavares, was it worth keep trying to break into this market, or should they focus more into the strong market, which is Europe and North America? Take a listen.
It's a fact, at least on the PSA side, that so far we didn't succeed. It's a fact, and we should not go around this. It's a fact that there's something we do not understand. It's a fact that looking for excellent operational efficiencies, we have not found that yet. But it is also a fact that we are succeeding everywhere else, which means something is not well connected there. And possibly in the new co-perspective after the merger, we'll have different ideas that we will be able to confront, different experiences that will help us to find out what is missing. Something is obviously missing. Something is not being done as well as it should be. And I think we just need to recognize that with some humility and consider that when we will merge, possibly other perspectives will help us to find what is not going well. And again, it's something that is ahead of us. It's an upside, because right now the results of China are not contributing to our overall profitability. So we are highly profitable, one of the most profitable car makers in the world, with this situation where we could say, well, for the future can only be better, and then it's an upside. So it's exciting to think that with our friends from FCA, we'll be able to think all together of a strategy that this time hopefully will work.
That was Carlos Tavares, the chairman of the managing board of PSA, and of course the future CEO of the merged group between PSA and FCA, talking about reevaluating the strategy in China. So we've seen a strong set of results here from Peugeot for 2019, and the stock, actually one of the few stocks in the green this morning. And yes, a strong set of results despite fears of the coronavirus and potential impact of supply chain, where Mr. Tavares said no impact so far, but of course concerns looking in the weeks coming through on what could be about supply chain for the whole auto sectors in Europe.
Charlotte, thank you so much for breaking it down for us and bringing us that interview. We're going to squeeze in a quick break, but coming up on Street Signs, Alcon posts a rise in full-year net revenue as the Swiss medical company gets a boost from its vision care unit. We'll cross live to Geneva with more after the break.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Weighed down can be a sign your digestive system isn't working at its best. Taking Metamucil every day can help. Its psyllium fiber forms a gel that traps and removes the waste that weighs you down. It also helps lower cholesterol and slows sugar absorption, promoting healthy blood sugar levels. So start feeling lighter and more energetic by taking Metamucil every day.
Take the Metamucil 2-week challenge. Lighten up. Just take Metamucil every day for 2 weeks. Available at your local retailer.
Day 1, 50 Peloton rides to start the year. Here we go.
Don't stop here, Peloton. Remember why you started.
Halfway there, just hit a 5-day streak.
What's that mean?
It means Daddy didn't quit.
I don't get it.
Almost 50 rides. Boom!
We did not wake up to be mediocre today, Peloton.
Okay, it's just another meeting.
Come on. You didn't wake up to be mediocre.
The world's newest ocean cruise line is yet again a world's best. Viking's elegant ships deliver a superb, inclusive experience with enriching shore excursions, alternative dining, all veranda staterooms, Wi-Fi, and much more. We're very proud to have been named a world's best 4 years in a row by Travel and Leisure readers. Learn more at vikingcruises.com.
I've pulled your credit and I've got some bad news. We're going to pass on that loan.
What? You just said a second ago I was fine.
Oh, yeah. That was before we saw all the negative items on there.
Wait. Negative items? That doesn't sound right.
You know, it's like they say, bad credit is forever.
That sounds made up. Kind of like these items on my credit.
Well, just because you haven't heard of it doesn't mean they don't say it.
They say a lot of things about credit. We say enough is enough. Try something new, starting with a free credit evaluation from creditrepair.com.
Virus fears continue to drive the market sell-off. How can investors protect themselves from the volatility? What first trades will reveal? Squawk in the Street, 9 a.m. Eastern today. Watch and listen live on the CNBC app.
Welcome back to Street Signs. I'm Juliana Tattlebaum.
And I'm Willem Marks. We're both in London. Here are your headlines.
The sell-off spreads to Europe after the Dow suffers its worst two-day point loss in history. U.S. health officials warn a pandemic is likely while the outbreak expands to Switzerland and Austria.
U.S. futures reversed gains as the flight to safety continues, with investors piling into U.S. Treasuries, sending the yield on the 10-year to an all-time low.
Lufthansa takes drastic measures to combat the fallout from the virus, offering employees unpaid leave and freezing hiring. That sends their shares lower in Frankfurt.
And Alcon shares see green after posting revenue growth on the back of strength in its surgical division. We'll speak with the CEO, David Endicott, later today.
Well, we're about an hour and a half into the European trading session, and as you can see here, stocks continue to slide, building on not only yesterday's losses, but also losses in the days leading up. We are now entering the fifth straight session in negative territory. The DAX is suffering quite significantly this morning, down about 2.4%. Over in Italy, the FTSE MIB also coming under further pressure, down 1.2%. This, the main benchmark in Italy, now entering correction territory. This obviously follows the steep sell-off in Italian stocks at the start of the week after Italy became home to the largest outbreak of coronavirus outside of Asia. Cases there now tally more than 320, 11 deaths reported so far in Italy. So investors across Europe digesting what this outbreak in Italy means for the spread of coronavirus across the European region. Let's take a look at Forex markets, what the currency pairs are showing us. The euro trading slightly firmer versus the dollar, around 108.87. Over here in the UK, sterling giving back some of its recent gains, down about 0.4%, around 129.55. Let's get a look at U.S. futures, because yesterday was a very, very difficult day for trading on Wall Street. We saw the Dow log an over 800-point loss. That was making it the worst two-day point fall in history for the Dow Jones. Now this morning, we're looking at more red across the board for Wall Street. The Dow looking at a more than 200-point drop at the open. Willem?
Thanks so much. Well, Alcon has posted a 3% rise in full-year net revenue to $7.4 billion. The figures were led by strong 4% sales growth in the company's surgical division and steady growth in its vision care unit. Our colleague Jeff Cutmore joins us live inside Alcon's headquarters in Geneva. What stuck out to you in these results, Jeff, and what's the company predicting for the rest of the year?
Yeah, very good morning, Willem. So let's just focus on the market reaction for a moment, and I'll then speak directly to your questions here. I think on a day where you've got a lot of generalized weakness around the markets and people are worried about the coronavirus story, inevitably people are going to look for defensive stories and some resilience. And I think, Willem, to come back to your question, that is what we've seen here as far as Alcon are concerned. The management keen to point out that this is the third year of consecutive increase in top line. They've delivered $1.88 billion net sale for the fourth quarter. The market was looking for 1.89, but I don't think they'll be begrudged the 1.88. The earnings per share core number coming in just off the headline analyst expectation as well, but close enough that I don't think the market will begrudge them that either. And the important bit, I think, is the forecast for 2020. So we saw that 3% full-year net sales number increase for 2019. The company is now guiding for 5 to 6% higher for full year 2020. They've also revised upwards the outlook on the margin, 17.5% to 18.5%. So that guidance also encouraging. And as I come back to that story of resilience and defensiveness, if you are concerned about capital gain and capital growth at the moment in your equity portfolio, there's nothing like having a little bit of income. And since this company span out of Novartis back in April of 2019, we haven't heard a great deal about dividend development. But today in the earnings announcement, we will hear a little bit more from David Endicott, I think, the CEO of the business, about why they now feel it's time to recommend a 0.19 Swiss franc dividend going forward. So dividend development, relatively resilient earnings stream, and a decent outlook for 2020. Good reason then perhaps for investors to be having another look at the shares. Back to you.
Thanks so much, Jeff. Really appreciate all of your insight there into those earnings from Alcon.
I want to bring you some fresh comments from French officials. France has now reported its second coronavirus death. A second person infected with the coronavirus has died in France, according to the country's health authorities. They've just announced this in a televised statement. It was a 60-year-old French man in very serious condition. He was tested in Paris late on Tuesday and unfortunately died in the night. In terms of what this means for France more broadly, this is one of 3 new cases in France of coronavirus, bringing the total confirmed coronavirus infections to 17. So that's the latest from France in terms of coronavirus in that country. Let's get back to what's going on in markets. Europe's biggest private equity deal in at least a decade could close as soon as tomorrow. ThyssenKrupp is expected to sell its elevator unit in a deal worth around 17 billion euros by tomorrow or Friday. 2 people working on the deal told CNBC. Let's get back to Peter Tesler, founding partner and portfolio manager at Lucerne Capital Management. Peter, before the break, you were telling us that we're really seeing some indiscriminate selling take place in European markets in response to the coronavirus. Surely this is fertile ground for private equity to come in.
Yes, correct. I mean, off the top of my head, I think about 60 billion worth of private equity money has been raised last year. If you add leverage to that, I mean, they can leverage on average between 4 and 7 times. You have a couple of $100 billion that really can be deployed also in public equity markets. So definitely there are some companies that must be feeling the pressure in terms of their stock prices being under pressure and private equity maybe taking a run at them.
Which regions and sectors stick out to you as prime real estate for private equity?
Yeah, typically areas where you have steady, predictable cash flows, so utility-type operations, again, telecoms, cellular towers, anything with predictable cash flows that private equity can borrow against. And my criticism of a lot of companies is quite often that if their stock price is going down and they don't fix that problem themselves by running a lazy balance sheet or having suboptimal capital allocation, they better fix it fast. Otherwise, private equity will come in and do it for them.
You talk there about the sectors that have reliable cash flows in particular. What about countries in Europe, for instance? Are there parts of this continent where structural problems on a national level will make some of these players more attractive to private equity?
Well, if you look at core Europe, let's say Germany, Switzerland, Italy, those should be attractive areas in terms of valuations, but the corporate culture is against being taken over by private equity. So typically, companies are run by managements that they look at private equity as the locust; they are the enemies. So they wouldn't be open necessarily to having private equity discussions. You see more of an openness here in the UK, in the Benelux, in Scandinavia, where managements are more open to optimal capital allocation policies, etc.
You mentioned the UK there, so if I can just pivot, but keep on the UK. I know you guys have increased your short positions in a number of European retail REITs in recent months. In the UK, we've heard from numerous people that there are dislocations when you look at UK asset prices as a result of the Brexit uncertainty. What do you think about asset prices in the UK? Is this an area where you see an opportunity? Is this an area where private equity is going to begin looking? Or do you think there's a short opportunity here, like you see with European retail REITs?
I would say more of a long opportunity because there's been so much uncertainty for such a long period of time. You see now also private equity and activists coming in Prudential, for instance. A lot of companies can be improved a lot in terms of capital allocation, management, etc. ThyssenKrupp in Germany is a great example of it. On the continent, I think Prudential is a great example of it in the UK, where a business that's operating in Asia and in the US that really shouldn't be operating under one umbrella, should probably be operating, be under separate entities, and be worth more and better run.
Juliana mentioned there that you've got short positions in European retail REITs in some stages. And I'm just wondering, given the impact potentially we get from coronavirus on retailers, you see these towns in northern Italy under quarantine, you think about what impact that has on consumer behavior, shoppers not being able to go out to buy what they need, what they want, discretionary spending that's been so important to driving the global economy dipping potentially on the back of this. Presumably that's good news for your positions in some of those sectors.
Yeah, originally our short thesis of shorting retail REITs and retail properties was basically the increase of online shopping. And I think the coronavirus only exacerbates that trend. I mean, yesterday in the UK, you saw Hammerson coming out with a profit warning and cutting their dividend. I mean, it's typically one of the stocks where some of their prime properties are very reliant on Chinese consumers, visitors, tourists, etc., and they're just not there. And then if you combine that with the fact that a lot of these companies have a lot of debt, some companies can weather this corona storm for the next 2, 3, 4 quarters, but some companies like these retail property companies have a lot of debt, so it will hurt them quite a bit to miss a couple of quarters of cash flow. So.
Now, I know you guys have a certain propensity for investing in Dutch companies, and Dutch companies historically have been penalized for their focus on other stakeholders outside of shareholders. They've had a lot more interest in climate change, sustainability than their U.S. peers, for example. Have you noticed a shift in investor perception of that focus on other stakeholders now that there is such appetite from the investment community to invest in companies that do actually prioritize stakeholders outside of shareholders, and Dutch companies often rank pretty well on that metric?
Yeah, very, very much so. I mean, the key word here is ESG, right? Environment, social governance. A lot of money is flowing into that space. A lot of basket money is flowing into that space. So we really see money flows going into particularly Scandinavia, Benelux, companies that care about their employees, care about their labor relationships, suppliers, other stakeholders. Definitely important.
All right, Peter, thank you very much for sharing your views with us. Peter Tisler, founding partner and portfolio manager at Lucerne Capital Management. He stays with us for the remainder of the show. Now back to some corporate news. Anglo-Australian miner Rio Tinto has posted its best underlying earnings in nearly a decade, boosted by higher iron ore prices. But the company warned about the short-term impact of coronavirus, saying the outbreak will present some challenges in the next 6 months. Underlying earnings for the full year rose to $10.37 billion, slightly below estimates.
Taylor Wimpey reported an uptick for the full-year pre-tax profit, with revenue also on the growth track. It hit £4.3 billion. The UK home builder delivered a record number of completions last year, 2019, but average sales prices remained broadly flat, while building costs inflated. The company flagged that the political and economic outlook of the UK market continues to be uncertain. And CNBC early this morning asked Pete Redfern, the CEO of Taylor Wimpey, if his business was affected by growing fears about the coronavirus spread potentially here in the UK.
At the moment, we haven't seen any impact at all, either on our supply chain or on customer demand and activity. That's not particularly surprising. We're a very UK-centric business, and it hasn't really materially impacted on the UK at this point. It would obviously be brave to say that couldn't happen over the next few weeks, but very, very hard to predict, because it massively depends on the extent to which people stay home, whether by choice or because they have to. So it's hard to give you numbers.
Scandinavian Airlines says it will take at least a 300 million krona hit from the coronavirus related to flight suspensions, but expects the effects to be marginal as long as the outbreak is contained before the summer season. This after SAS doubled its first quarter net loss to 1.1 billion Swedish krona as it continued to suffer from unfavorable currency movements. But revenue increased 3% to 9.7 billion krona on the back of passenger growth. Now, speaking to CNBC earlier this morning, SAS Group CEO said that while demand in Hong Kong was down due to the spread of coronavirus, global data for the summer season remains unchanged.
This thing is actually moving very rapidly, and things change all the time. And I wish I had a crystal ball so I can look into the future. I don't. So I have to, rely on the intelligence that we have and the booking patterns that we see. And so far, if I exclude China and also include Hong Kong in that, where we still operate, but of course the demand for Hong Kong has dropped rather radically in the last few weeks, we still see a normal incoming booking pattern for the summer season.
And coming up on the show, Bob Chapek takes over at Disney as the former theme park boss looks to keep the magic going at the media giant.
You want a fresh-smelling home, but some air fresheners use heavy, overwhelming scents. Try Febreze One, a range of innovative air fresheners with no heavy perfumes that you can feel good about using in your home to deliver a light, natural-smelling freshness. Febreze One neutralizes stale, stuffy odors and releases a subtle hint of fragrance, like bamboo or lavender and eucalyptus. To eliminate odors with no heavy perfumes, try Febreze One. Brand power helping you buy better.
Don't waste your time and money at the chain store. They got the best auto parts, brake parts, suspension parts, and dealer parts too. The website's so easy to use. The lowest prices and fast delivery too. All the parts your car will ever need. All the savvy folks are buying parts at rockauto.com. All the parts your car will ever need. rockauto.com.
For drug-free sinus and allergy relief, experience Navage.
This time of year, I get so stuffed up, but Navage flushes my sinuses so I can breathe again.
Navage uses powered suction to flush out allergens, germs, mucus, and dirt.
My doctor recommends Navage to breathe better through my nose, and it works. Congestion's gone, and I feel great.
And Navage is so much easier than a neti pot.
Trusted by happy noses everywhere, Navage is nature's decongestant. Online and at these fine retailers.
Do you worry about going to the dentist? After all, a visit to the dentist can easily cost $2,000 or more. Well, relax. The Carefree Dental Card is now available in your area. Call now and we'll send your actual card at no cost today. With the Carefree Dental Card, you go to the dentist whenever you need and you instantly pay a lot less. Activate your card and you can start using it immediately. From exams and cleanings to more expensive procedures like crowns, dentures, even braces, they're all included with the Carefree Dental Card. Say you go to the dentist today without any card and your bill is, well, ouch. Wait a minute, let's try that again. You go to the dentist today and show your Carefree Dental Card, you save $525. The Carefree Dental Card is just $15.95 a month. So call now and make going to the dentist carefree.
Call 1-800-478-0809 to receive your free Carefree Dental Card information kit. Call 1-800-478-0809 now.
Read. Read yourself past the gossip mags, past the agendas, the bias, the partisan pandering. Read yourself better.
Welcome back to the program. Bob Iger has stepped down as CEO of the Walt Disney Company after years of speculation about his succession. Turns out Bob Chapek, the former head of Parks and Resorts at the company, will take over with immediate effect. But Iger will stay on as executive chairman to oversee all creative endeavors until the end of next year when his contract actually expires. He became CEO back in 2005, led the company through major multi-billion-dollar acquisitions including Pixar, animation, Marvel, and more recently, Lucasfilm.
Disney isn't the only one seeing change at the top. Keith Block is stepping down as co-CEO of Salesforce, leaving co-founder Mark Beinoff as the sole chief executive of the business software company. Shares fell in after-hours trade following the announcement that also came on the back of weak fourth-quarter earnings, which missed analyst expectations. Salesforce reported a loss of $248 million for the period, compared with net income of $362 million the year previous. Now, talking U.S. politics, stakes were high as Democratic presidential candidates squared off in their last debate before the crucial Super Tuesday votes next week. Frontrunner Bernie Sanders was on the defensive as rivals argued Americans would not elect a self-described Democratic socialist. Strong results in the 15 states set to vote next week are widely viewed as a bellwether for the Democratic primaries. NBC's Alice Barr has more.
As the clear frontrunner, Bernie Sanders stood center stage tonight, but from the start, his rivals attacked him for leaning too far to the left.
Anybody in this room imagine moderate Republicans going over and voting for him?
The last 50 polls that have been done nationally, Mr. Bloomberg, I beat Trump 47 of those 50 times.
The candidates accusing Sanders of proposing plans he can't pay for, like Medicare for all.
So let's do some math. Senator Sanders at one point said it was going to be 40 trillion, then it was 30, then it was 17. It's an incredible shrinking price tag.
What every study out there, conservative or progressive, says Medicare for all will save money.
Also sparring over gun control.
Bernie voted 5 times against the Brady bill.
I'm the only one up here with the receipts that has actually repeatedly, while being for the assault weapon ban, won in Republican congressional districts over and over again.
Though Sanders faced the most attacks,
but I think I would make a better president than Bernie.
The stakes may be highest for Joe Biden.
I will win South Carolina.
Who's positioned himself as the strongest with voters of color.
My entire career has been wrapped up in dealing with civil rights and civil liberties.
Race, a central theme tonight ahead of the first in the South primary.
And I know that if I were black, my success would have been a lot harder to achieve.
We should have a formal commission on race to retell the story of the last 400 plus years in America of African Americans.
Sparks flying tonight as each candidate fights for a path forward, though they're united on one point, denying President Trump a second term. This was the last debate before 14 states vote on Super Tuesday 1 week from today. The other candidates trying to stop Sanders from coming away from those contests with an unbeatable delegate lead. In Washington, Alice Barr, NBC News.
Well, we've still got Peter Tasselar, the founding partner and portfolio manager from Lucerne Capital Management, with us for a couple of minutes. And just briefly, Peter, looking at this race, in the Democratic side of the race. Does it matter who ends up as the nominee, and if so, why?
Well, first of all, it's like, in terms of uncertainty, as if coronavirus weren't enough. You have the Democratic debate, and everybody in the primaries tend to take a very extreme position, in this case to the left. So very anti-business, increasing taxes, probably increase the steps in terms of the trade war, America first, etc. So very anti-business-like sentiment, which is on the news now every day, which is not helping stock market sentiment. In terms of who will win, definitely Bernie Sanders seems to be the most extreme on the left and anti-business. That would not be good for the stock market, I believe. I'm not predicting he will win or who will win, but definitely his agenda is pretty anti-business.
And in terms of President Trump, what are you expecting in terms of who and what he'll target as he looks to increase his campaigning in the run-up to the election?
Well, if Sanders will be the candidate, he'll say Sanders is a communist, socialist, and it's anti-American. So end of story.
But more on the trade side of things, looking externally, because that's obviously pretty relevant to what happens in global financial markets.
Well, I think in the run-up to the elections, we won't hear much from Trump in terms of trade war or potential to damage the economy. I think you'll only see that after the election. And then probably he will step up his rhetoric, not only against China, but also France and the EU in general.
So you think essentially it benefits President Trump going into that November vote to have things relatively calm in the markets and have the economy ticking over without huge upsets?
Exactly, yeah. I think the main platform that he will run on is the economy. And that's really, his main achievement, or you can debate whether it's his or his predecessor, Obama, but definitely the economy is still, before this whole coronavirus hit, doing well, and that should be his main platform, I think.
Peter, thank you very much. Peter Tesla is the founding partner and portfolio manager from Lucerne Capital Management, who's been with us throughout the show.
Let's get a check now on where things stand in European markets. They have been trading now for about 2 hours. The Stock 600 trading about 1.5% lower. So clawing back some of the earlier steeper losses, but red across the board, as you can see there. Every major region and every sector in the red this morning. Let's get a look on markets, though, what the individual regions are seeing. The FTSE MIB now down just 0.4%. So fairly modest. Although the FTSE MIB has entered correction territory off the more than 10% off recent highs. The DAX bearing the brunt of the sell-off this morning, down about 1.7%. Lufthansa coming out earlier on this morning, taking drastic measures to try to mitigate the risk of coronavirus, announcing a new cost-cutting program, suspending hiring, and offering employees unpaid leave. So that stock firmly in focus and dragging down broader airlines. So on that note, let's take a look at sectors where things stand. Travel and leisure down 3.5%, the worst performing sector in Europe, and Lufthansa clearly having an impact. And also investors just more broadly weighing up what the outbreak in Italy means for broader Europe and what that means for travel patterns. Autos, the best performing sector, up about 0.7%. We did hear from PSA Group today, a fairly bright set of earnings relative to expectations, and that stock has performed relatively well. But overall, another down day for Europe. Let's take a look at U.S. futures. Yesterday, Wall Street saw a very, very tough trading session. The Dow down about 880 points. This morning, it looks like the sell-off will continue.
That's it for today's show. I'm Willem Marks. Thanks so much for watching.
I'm Juliana Tattlebaum. Worldwide Exchange up next.
There you go. Slow slicing fruits, veggies, and those stinky onions that bring you to tears. But not anymore. Introducing NutriChopper, the compact handheld speed slicer that cuts up to 10 times quicker than a knife. Watch, you can have one slice or 10 perfect slices at once. Amazing! You can just julienne, or you can bundle slice julienne sticks at lightning speed. With NutriChopper, you can slice the entire onion or mince a mound of onions and never have time for tears. Why slice a single apple wedge when you can wedge it all in one snap? NutriChopper comes with the razor-sharp interchangeable stainless steel blades you need to make all of the cuts you want, and all incredibly quick. Chop thick slices, chop thin slices, chop cubes, chop sticks, and wedge whole fruits and vegetables in just 1 second. Slice it and cook it right in the pan, right on your stove. Chop and slice right into the pot for a family-sized stew with no mess. Snap and slice a fruit salad for the kids right into the bowl in seconds. Slice up a healthy salad for a quick and easy meal on the go. Cube meats and cheeses quick, in a snap. And NutriChopper comes with a perfect portion container and fresh-keeping lid so you can slice it, seal it, and store it all in one. To clean, simply rinse or rack it in the dishwasher. Then lock it to store it safely in a drawer. And now the NutriChopper with the thin slice, thick slice, wedge, and cube blades. And the slice and store container and lid, a value of over $40, is yours for just $19.99. But wait, order now and we'll even pay the shipping for you. You get the complete NutriChopper set with blades and container with lids, all for just $19.99 with free shipping. Here's how to order.
To order, call 1-800-257-9942 or go online at NutriChopper.com. That's 1-800-257-9942 or go to NutriChopper.com. Order now.
It's time for a special announcement from Four Seasons Sunrooms and Windows. Transform your home and change your life with a Four Seasons sunroom. And watch this announcement until the very end for a special code for exclusive additional savings. And now it's time for Four Seasons. It's time for family gatherings, to stretch imaginations, to get together or find some time alone. It's time for a Four Seasons sunroom. And right now, Four Seasons has special offers that let you have it all for less money than you thought. With no money down and no interest for 12 full months. Call Four Seasons and get your free quote and information today. Thanks for watching. Now call the number on your screen and mention the special code TIME and receive exclusive additional savings on your new sunroom. Four Seasons. It's time.
The biggest problem that we're helping address is access to care. Doctor on Demand is available nights, weekends, holidays, on a mobile phone or on a website. So much of the value that telemedicine can bring is empowering patients to seek care when the opportunity for our overall healthcare system is to deliver all the healthcare virtually that can be delivered virtually. That'll reduce costs, increase quality, and drive satisfaction for the doctors and the patients. This is the future of business. I watch CNBC.
Markets in turmoil after the Dow suffers its worst two-day point loss in history, and Wall Street is looking at even more losses today. This as investors digest mixed messages from Washington, D.C. over a possible coronavirus pandemic, that P word here in the United States, and the end of an era at Disney as Bob Iger announces his retirement as chief executive after nearly 15 years at the helm.
It's been a fun run, and I'm looking forward to the run ending. But I still have a job to do.
And what will you do after 2021?
I'm going to use my imagination.
You will use your imagination.
I'm going to go to Disneyland.
All right, it is Wednesday, February 26, 2020, and Worldwide Exchange begins right now. Good morning and welcome to the show. I'm Dominic Chu in for Brian Sullivan today. Wall Street is waking up with a black eye once again after another down day for the major averages. The Dow is now down more than 6.5% over the past two sessions alone, its worst performance on a percentage basis since February of 2018. You can see there a huge move. A much worse picture on a point basis. The Dow is now coming off its worst two-day point loss in history, losing more than 1,900 points during that span. The Dow futures this morning were positive at one point. Check this out. Again, lots of green you can see here throughout the course of the session, and then all of a sudden, within the last hour or so, we took a huge leg lower to the downside. Now, just to kind of point out, at the highs of the session for the futures and the lows, we have then traversed 641 points for those Dow futures. So just to give you an idea of that big swing that we've seen so far intraday. The bond market, a key focus as well. Remember, record low levels now for the 30-year long bond and the 10-year Treasury note, all in play just in the course of this week alone, and it's only Wednesday. Right now, the 2-year note yield, 1.175%, and a slight tick higher on 10-year note yields, 1.34%, 1.825% for the 30-year long Treasury bond as well. Let's check now on the markets around the world and how they are faring. Matt Taylor is in Singapore. Juliana Tattlebaum is in London. And Matt, we are going to start with you. The red seems to just be the color of the week so far, and it's stayed that way in Asia.
Absolutely, although we should point out that things here in Asia were perhaps a little bit more contained than what we saw in your Wall Street session overnight for us. The Australian market was well and truly the laggard today, down by around about 2.3%, but elsewhere things were a little bit more contained. Across North Asia there we saw declines in the order of about 1%. Japan down by 0.8%. We continue to see a strengthening in the Japanese yen right around that 110 level, pressuring the Japanese market. South Korea down by about 1.3%, ahead of a likely interest rate cut out of the Bank of Korea tomorrow, 25 basis points. China markets weaker as well. We're watching Hong Kong particularly close today, down by about 0.75% because we had the budget unveiled. 120 billion Hong Kong dollars, or about 15 billion US dollars, was the stimulus being pumped out in this budget. The bulk of that on cash handouts, 10,000 Hong Kong dollars, about 1,200 US dollars for all permanent residents. However, the Hong Kong market really not cheering that news, down by about 0.7%. Shanghai, 0.8%. Some of the smaller markets, some larger declines there. China's down 4.3%. Dom, back to you.
All right, Matt Taylor live in Singapore with the Europe or the Asian market action. Juliana Tattlebaum now. What's the early trade looking like in Europe? We are seeing a much more negative picture there as well.
The European markets are sliding for a fifth straight session, but we have bounced off the lows of the morning. In terms of regions, the DAX, the German benchmark, is trading a lower in particular, so bearing the brunt of the sell-off. Airlines in sharp focus this morning, bringing down the travel and leisure sector. We heard from Lufthansa, which is Germany's largest airliner, that they are taking some pretty drastic measures to try to counter the impact of coronavirus. They said that they are suspending new recruitment, and they've offered employees unpaid leave to try to mitigate the impact of coronavirus on their business. And this is weighing on airlines across the European region, and that sector is underperforming. Now, CEOs across Europe this morning, across sectors, have been speaking on the back of earnings and flagging that coronavirus will be an impact as we look to 2020, but they are hesitant to put a number on it. They're hesitant to quantify the impact. But putting it all together, another negative trading session here in Europe, and this follows yesterday when the Stoxx 600 fell 1.8%. Back to you.
All right, Juliana Tattlebaum live in London with the latest there. Thank you very much for that. Now, rising pandemic fears over the coronavirus sending shockwaves through Wall Street and around the world as well. More than 60% of the S&P 500 stocks are now trading in what traders some call correction territory. That's defined as being down 10% or more from their recent highs. But the White House continues to send the message that there is no panic among policymakers, at least not yet.
Based on the numbers we know, GDP, Atlanta Fed GDP now is 2.6% for Q1. That could change, but that's what we know through February 19th. All these regional Federal Reserve ISM reports, they're not hearing chatter about the virus, and there is no evidence yet of any supply disruptions.
All right, that was President Trump's chief economic advisor, Larry Kudlow. Joining me now is Paul Donovan, chief economist at UBS Global Wealth Management. I have to say, Paul, it's probably no surprise that the White House is now putting its people out there to try to talk people down from this panic situation. But is it a panic for markets and a panic for the global economy right now?
Well, that's not quite the same thing. There's the markets and there's the global economy, and the markets are a very small part of the global economy. When you get something like this, which presents disruption to global supply chains, obviously it is the large listed companies that are going to be most affected by that, and so you see the reaction in the markets. But in the wider economy, that's only 25% of the wider economy is made up of large listed companies. The wider economy, generally speaking, we're not seeing fear, we're not seeing panic at this stage. I just walked to your studios here across the City of London, not a single mask on the streets of the City of London, not one. And I think that that's sort of indicative of a far calmer response in the wider economy, away from the globalized companies.
Now, you make an excellent point here, Paul, and the reason why I say that is because even with the large drawdown that we've seen in global stocks, and especially here in the U.S., we are still very much in an uptrend over the last 10 years. But it does bring to light some of the issues in the global marketplace right now. Bonds have been signaling a slowdown for quite some time. Equities are now playing catch-up. Is that how you see it?
Frankly, no. I think the economic signal of the bond markets went years ago. I mean, bond markets are rigged. They're manipulated by quantitative policy, by regulation of the financial sector. This is why the UK yield curve hasn't signaled anything about the economy for 60 years, because it's a managed market. And I think that's now become a global phenomenon. When we look at the underlying economics, I think the underlying economics going into this situation were okay. The consumer was fairly stable. Investment was weak in the aftermath of the trade taxes that we've had out of the United States, the uncertainty that's caused. But the consumer was fairly stable. And I think that's probably why the markets are so nervous now, because if we were to see fear spread to the person in the street, then that could potentially weaken the consumer. And it has been the consumer that's been the foundation of the economic growth that we've had over the last 18, 24 months.
Well, consumers in China certainly aren't spending. They're stuck at home right now. They might be online shopping. Is the coronavirus fear and the possible spread to other jurisdictions around the world going to have an impact on the global economy? Because it will, in essence, take away some of that consumer spending power.
So certainly there's an impact if you look at aggregate GDP, so the global GDP number. I mean, the problem there is the global GDP number is a fairly meaningless statistic. China certainly is hit. There's no question about that. As you say, you have a slowdown in certain forms of consumer spending. Though I would note that spending on online computer games rose 40% year. If you're spending 24 hours at home with your family, the chances are you're going to need some kind of escape